Number 3 of these 7 stocks up here that I am buying in September 2023 is amazing on Amazon stock. So, Amazon stock actually has had a bad past 5 years. Stock's only up 36%. For Amazon, that's a rough 5-year span there, okay? Let's just put it that way. Now, the way you need to think about Amazon's business model, and the way I think about Amazon's business model is this, okay? Because most people, when they think about Amazon, they think about Amazon stock, the first place their mind goes is like, oh, cool, I'm buying Amazon, the e-commerce business. And they think about all the stuff they order on Amazon, and they think about all those trucks driving around their neighborhoods. All fine, man, all cool stuff. But that's not where your mind really needs to go in regards to Amazon. The first place your mind needs to go is Amazon Web Services, okay? Amazon Web Services, think of it as a backbone of companies. Think about it as almost like the backbone of the internet now at this point in time, okay? Amazon Web Services, the big cloud giant itself. This is where the big profits come from for Amazon overall. I do believe the e-commerce business will build out profitability quite substantially over this next 5 to 10 years, but if you look over the years, it's really, how Amazon's really making their money is really from AWS, okay? Now, with that being said, after you think about AWS and how big that can be 5 or 10 years out, then you need to consider the e-commerce business, right? Then inside that, you need to consider Amazon Prime, because Amazon Prime, one of the biggest paid, if not the biggest paid membership service in the world for something like that, right? Absolutely incredible how many people are signed up for Amazon Prime, and I'm sure the numbers are just going to continue to grow over the years, and they'll be able to command higher and higher price points, as we've seen recently with them going up on price, right? At the end of the day, like once you sign up for Amazon Prime, I've been signed up for Amazon Prime for years, and I can't even consider, even if they were to go up $30 a month, I'm not canceling Amazon Prime. Come on, man, okay? Amazon infrastructure is something they've built out over the last 15, 20 years that's way underrated with the company. You can't duplicate that unless you have, so much money to spend. It's ridiculous. Their planes, their trucks, all over the place, their distribution network, their facilities, their robots, the logistics side. You can't duplicate that unless you have just so much money and know-how. I don't even know who could. The one company that seemed like they might try to challenge Amazon there was Shopify. And even Shopify got into that infrastructure side and they realized, oh, hell no, this is too much, okay? So Amazon now has this super unfair advantage of their infrastructure that's just, in my opinion, one of the most underrated business aspects of any big tech company in the world, okay? Then from there, you need to consider their advertising business that has built out into a giant in the advertising space. Now, when you think about advertising, you really think about Google, Meta, which is the ones you've always thought about, and right under them, now you're starting to think about Amazon. Their advertising business has become a giant, okay? And I'm sure it has a long runway of growth ahead of it, and that's a straight profit. We know advertising brings in straight profits. Look at Google, look at Meta. That's a really exciting opportunity for Amazon, okay? Then from there, you need to consider the fact that they own businesses like Whole Foods and Twitch and others, okay? And so there's so much going on at Amazon. There's so many giant businesses they really own that are just game changers that it's a very exciting opportunity. And obviously, Andy Jassy reminds me of just like Jeff Bezos 2.0. Even some of their, oh gosh, the laugh is the one thing Jassy doesn't have that Bezos has, and obviously Bezos just has a little more stage presence. But even their tonality, even the way they speak between Jassy and Bezos, it reminds me so much of each other. It's unbelievable. And Andy Jassy was a man who really oversaw Amazon Web Services growth over time. He's done a phenomenal job leading Amazon since obviously Jeff Bezos stepped away. Now, in terms of EPS side, okay. And the company looks like it's trading rich. Based upon 2024 numbers from analysts, the company looks like it's rich, right? It trades at a 45 PE. Keep in mind, if you're going to grow EPS 40% or so, and you're expected to grow that over the next few years, that's not a high PE at all, right? If you're a company that's going to grow your EPS 3%, that's a very high PE. If you're growing your EPS 40%, that's not a high forward PE. And we do know, Amazon historically has been known as a company that beats their earnings per share estimates. And so if they can come in with some very nice beats that I believe they'll come in with over this next year, that's a pretty extraordinary opportunity there, right? Now, keep in mind, on the revenue side, this company has growth for days, obviously, right? And keep in mind, as in terms of analysts, they actually have the company growing way under what they've historically grown at. Usually, Amazon's a company you can think about growing 15 to 25%. Obviously, analysts have gone much more conservative with about 10% growth. So we'll see if that holds up, right? But overall, they should cross over $600 billion of revenue in 24, over $700 billion of revenue in 25, and it's kind of a toss-up between 28 and 29 when they cross $1 trillion in actual revenue. Like, that's an incredible number to like just wrap your head around. $1 trillion in revenue, like crazy. That's where this company's headed, right? Now, in terms of myself, this is my Amazon base case, okay? I have been averaging 12% revenue growth over the next several years, which I think is, not too crazy. I think that's pretty conservative. I've been doing about 18% net income growth on average for the company over the coming years. Keep in mind that number is probably low based upon kind of what analysts are expecting here of these kind of like 39%, 42%, 27% numbers. So I might have gone a little conservative there with my net income growth, and that's fine. Now, the company should be able to command in 27 a forward PE or a PE of somewhere that's called 30 to 40. That puts it at about 1.7 trillion to about $2.3 trillion market cap. And that's with a net income margin of only 6%, 6.5%, okay, from my base case. So given what I think this company's doing, the base case around it, yeah, I'm willing to take let's just call it the risk-reward profile of Amazon. And this is another one of those businesses that I can feel comfortable buying Amazon in any economy. If the market's crashing, I can feel comfortable putting money in Amazon. If the market's skyrocketing, I can feel comfortable having money in Amazon. If things are just so-so, I can feel comfortable having money in Amazon. It really doesn't matter. Anyway, I feel comfortable having money in Amazon with the management team there, the business model they had there, the pedigree. I mean, it's phenomenal. So that's Amazon, otherwise known as Amazingzon. All right, next one up here. We're going to talk about good old Tesla, my Tesla. So when it comes to Tesla, the stock obviously got hit Friday very hard. It was down over 5%. We're down over 20K on that one. We're down to our last $368,000 in gains on good old Tesla, my Tesla, 938% on this one. When it comes to Tesla, here's what's going on. They just cut price. I'm so sick of talking about Tesla price cuts. It seems like every freaking week I got to talk about Elon just cut prices again, okay? So they dropped Model X to $80,000, a $41,000 reduction. Okay, we're switching. Hello. A $41,000 reduction from the start of this year. Okay, so now the S and the X are going to be eligible for these tax credits. That's cool. That's good. But man, is this absolutely crazy, right? So check this out. Since the start of the year, the Model S started the year about 105. It's down to 75 now. The Model X started the year at 120. It's down to starting at 80. I mean, this is epic price cuts. I mean, if they cut $4,000, okay, they cut $4,000. Put me to sleep, okay? On a $100,000 vehicle, that's nothing. It's like 4%, right? $41,000 since the beginning of the year? Yeah, that's Elon on a mission, okay? Elon's on a mission to absolutely decimate, it seems like everybody else, and he just wants to move volume. He's like, I don't care. I will cut price. I'll do whatever I have to. I am about moving units. That's all he cares about. He doesn't care about margins right now. He doesn't care about profitability. If it's not clear already, I don't know what's going to make it more clear. And I've been talking about this for pretty much this entire year. Elon does not care about margins right now. He does not care about profitability at all. At all. Not even like 1%. Like maybe a little. No. Okay. All he cares about is volume. That's it. And so that creates us into a dilemma in the short term where margins are probably just going to keep going down. Because I can guarantee you they haven't saved $41,000 in cost on these vehicles. They might, find ways to save a few $100 here, a few $1,000 there, but it's not $41,000. This is coming straight off margin. This is coming straight off profitability. Okay? And so ultimately, it's a great time if you're an S or an X in the market for that. But the problem is, if you're really down the Tesla rabbit hole, you see Elon keep cutting price, and Tesla in general, right? I don't want to put it all on Elon, but you see them keep cutting price, and at the same time, you're like, why wouldn't I just wait? Seriously, like why go buy an S or X unless you absolutely have to tomorrow? And that's the problem if you keep cutting price, because let's say you were bought after the first cut. You're like, oh yes, 95K, woo, okay, now it's 75K. So who's to say in another month, 3 months, whatever, it's not going to be 69K, right? 69,420. That would be an Elon move there to make on the S, right? Who's to say the Model X isn't going to 69? So these are sorts of things you got to run through these scenarios with Elon, and he's just on a mission to move as many units as he can possibly move, and he doesn't care at all about margins of profitability. If he had to take Tesla into net loss, he would take it in net loss. It's clear. It's clear. He doesn't care at all right now about profitability. So it is what it is. As a long Tesla shareholder, this is stuff you have to kind of go through. But yeah, it's not too fun in the short term. I can tell you that it's not too fun in the short term. But the long term remains intact, and you don't want to compete with Tesla, man. They're nasty to compete with. They're beating you on tech, they're beating you on the vehicles, and they're beating you on the price. You lost. Like Tesla won, but it's just not going to look like it in the short-term profitability numbers. I can tell you that. Okay.